This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Biotech blown out. A second straight sell-off by the group slams the NASDAQ. So why did the once red-hot sector suddenly cool off?
Clock's ticking. 1 week left to sign up for Obamacare's health coverage plans. But the rocky launch has some states already scrambling for the next deadline.
And all but lost. Malaysian authorities concede the missing airliner is likely at the bottom of the ocean. We have all that and more tonight on Nightly Business Report for March 24th.
And good evening, everyone, and welcome. Biotechnology, already known for some breakthrough therapies, it may prove to be one of the most exciting businesses of the 21st century. Its promise, medicines that could improve and save lives of millions of people. So far this year, biotech stocks with names like Biogen, Celgene, Gilead Sciences, Amgen have been among the market leaders, especially on NASDAQ. But for the past 2 days, not so. They've gotten whacked hard, down sharply on Friday, partly in response to reports an influential congressman had questioned one company's drug pricing. Those stocks tumbled again today. As you can see, the NASDAQ Biotech Index was off 3% today alone. That had a big impact on the markets overall, which were able to close well off the lows of the session. The Dow up as much as 80 points at one time, down as much as 87, finished the day just 26 points lower. The NASDAQ, though, a steep dive there, down by 50, more than a 1% decline. The S&P lost 5. Sheila Dharmarajan now taking a closer look at what's driving the sell-off among the biotechs.
The sell-off started last week after congressional Democrats sent biotech bellwether Gilead a letter asking for more information about its pricey drug to treat hepatitis C. The drug, Sovaldi, cost approximately $84,000 for a 12-week treatment, making it one of the most expensive drugs in the country today. While experts don't believe that the inquiry will have a near-term impact on drug pricing, investors did become concerned that there will be more scrutiny on the entire industry and its pricing practices. Over the past 2 sessions, the ARCA Biotech Index, a commonly followed measure of biotech stocks, has fallen as much as 7%, making it the worst 2-day losing streak since August 2011. It's a notable drop for an index which has been one of the best performing asset classes in the U.S. stock market. In 2013, biotech stocks as a group rose more than 60% and continue to post double-digit gains this year. Now, despite the recent sell-off, several Wall Street analysts do remain positive on biotech stocks. RBC notes that the fundamentals, especially for the larger companies, remain solid, and JP Morgan says that growth prospects still remain above the overall market. For Nightly Business Report, I'm Sheila Dharmarajan.
Joining us now to talk more about biotechs, Jeff Porges. He's senior biotech analyst at Sanford C. Bernstein. Jeff, you know, this sell-off, as Sheila just reported, was triggered by the words of one congressman about one company. Is this an overreaction, this sell-off? Is it justified?
Certainly, there was a lot of alarm about the letter from Mr. Waxman on Friday and potential risks to the biotech pricing model. We really don't think that there's much to be read into this letter, and the ability of Congress to dictate prices to pharmaceutical companies like Gilead really doesn't exist in the current legislation. So we aren't terribly concerned about that. However, it does signal some loss of confidence in the group, and how the stocks have traded is certainly instructive for those of us who've been very close to what's been a remarkable rally in the group over the last 2 years.
So it's down, single digit in percent terms over the past couple of days, Jeffrey, but where do you think it ends? Is there more decline to go here?
Yes, we've had about, give or take, a sort of 5 to 10% correction. The best performing stocks have been the largest caps. The worst performers have been the sort of early stage technology-based companies. The corrections probably in this industry can be as much as 20 to 30%. So when we really see this selling pressure, you could see another 10 to 20% before we're done. And what you saw today is probably how it plays out. The largest caps are the most defensive. The smallest and emerging companies will be hit hardest.
So, Jeff, what do you do if you own, for example, a biotech ETF? What should an investor do? Sell it or hold on for now?
The biotech ETFs have been a great way to play the sector over the last 2 years. Most of them have more or less doubled, give or take, and a lot of the upside has come from the largest cap names. I would be making sure that portfolios are skewed towards those large caps. Something like Amgen today, only down 2% in the face of a big sell-off in the sector. Even some of the other large cap names, the Celgenes and the Gileads, are a safe place to hide in the event of a correction. Unfortunately, a lot of these ETFs are going to get heavily skewed around by some of these emerging companies that just don't have the cash flow support to their valuation.
So if I'm tempted by the idea that this sector is one that over the long term, and I assume you agree with this, tell me if you don't, is going to be one of the really growth areas in medical technology, should I invest, number one? And if so, should I leave the stock picking to a pro like you?
Well, look, there's no doubt we've seen revolutions in technology in the biotech field over the last year and a half or so. Cancer immunotherapy, nucleic acid therapeutics, gene therapy. These are just some of the very exciting opportunities that have emerged and in many ways have been validated. So the optimism you describe is certainly justified. What people don't fully understand is the riskiness of these technologies and the development projects. Many of them are just science experiments. So if you're committed to investing in that innovation, I'd wait for the dust to settle here and then get back into the ETF or have a basket of these emerging technology companies. And certainly companies like Celgene have access to that innovation through their partnerships. We think that's a good way to participate rather than trying to pick stocks yourself.
Real quickly, we have less than half a minute. Would you put new money into a company like Celgene or Amgen, some of these that you were just mentioning?
Certainly, those large caps, I think, are attractively valued here, and we're definitely recommending Celgene and Gilead. I would just be more cautious about the smaller cap names.
All right, Jeff, thank you so much. Jeff Porges, a senior biotech analyst at Sanford C. Bernstein. Thank you very much.
Thank you.
There is just 1 week left until the Affordable Care Act's open enrollment period ends, but for some states, another deadline looms, leaving just 6 months to fix problems still plaguing their web-based exchanges in time for 2015's open enrollment. As Bertha Coombs reports, it may be harder to effect some of those fixes than to start from scratch.
After a notoriously bad start, Secretary Kathleen Sebelius is looking for a strong finish to ACA open enrollment. The federal healthcare.gov marketplace now works well for the 36 states it serves, but in about half of the states that built their own exchanges, problems persist.
We certainly have some states that get an F grade. Some that are in the D category.
Among those not making the grade, Hawaii, Massachusetts, and Vermont, which all used CGI to build their exchanges, the same contractor blamed for problems with healthcare.gov. The Bay State fired CGI last week. Maryland also fired its contractor, North Dakota-based Noridian. But even big-name tech firms stumbled. In Nevada, Xerox is under fire for its faulty software. But CEO Ursula Burns is grateful that the state will keep her firm on.
Having a disciplined engineering development and rollout is what is needed in these exchanges. Just like anything else, it's kind of like getting a person to the moon. You don't do it fast, you do it right.
Nothing seemed to go right in Oregon. Federal and state investigators are trying to figure out why the state's exchange, built by database giant Oracle, was never able to enroll people online after more than $240 million in federal grants. Analysts say, like CGI, Oracle never built a system end-to-end and didn't have enough time to test.
Oracle Policy Automation rules engine is used in numerous successful exchanges, but to have the entire framework applied, or the entire IBM Current framework applied to this particular solution had not really been proven out.
The exchanges that worked best, California's, whose lead contractor was Accenture. Washington State, Kentucky, Rhode Island, and Connecticut, which were all built by Deloitte Consulting. Connecticut's Kevin Cunahan says the key to success was that his team worked closely with Deloitte to figure out what was achievable under a tight deadline.
We were building a Cadillac, and we decided that we needed a Ford Focus. And we scaled back about 30% of what we originally wanted. And coming out of that was a much more focused type of workflow.
With 2015 open enrollment starting in less than 8 months, troubled exchanges face another tight deadline. States like Oregon are going to have to decide soon whether they're going to try to fix what they have or scrap it altogether after investing hundreds of millions in federal grants to start fresh with proven technology. Bertha Coombs, Nightly Business Report.
The latest now on that missing Malaysia plane with 239 people on board. After 17 days, relatives received word late today from Malaysia's prime minister that after numerous satellite images spotting debris, there was, quote, no doubt that Flight 370 went down in the Indian Ocean and that no survivors will be found.
With deep sadness and regret that I must inform you that according to this new data, Flight MH370 ended in the southern Indian Ocean.
Eunice Yoon has more from Beijing, where relatives of those aboard the jet got the news today.
The families in China were overwhelmed with despair. The relatives have been staying in the hotel behind me for the past 2 weeks since the plane disappeared, and it's been a very difficult and tense time for them, where every bit of information or every rumor that's come up has really weighed on their mental state. Now, the airline had called the families in for an emergency briefing tonight. They said they were listening to the statement by the Malaysian Prime Minister on TV, and it was a statement that none of them wanted to hear. Now, this was a very controlled area normally, but chaos quickly ensued. There was a man who ran out of the room. He quickly fell down an escalator. He fell on his back and had to be dragged away. There was a woman who fell to her knees amidst sobs, and she said that her children were on the plane. She said her grandchildren were on the plane and that she was now alone. There were many medical emergency workers who were going into the room, and they were trying to help the people who were there because several of them had fainted from the shock, and there were also angry relatives who started to break out into fights and were demanding more information, clinging on to any hope and any sign that their families might be alive. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Well, the recent slowdown in growth in China's economy, coupled with Beijing's loosening its grip on the yuan and opening up the capital market, has had a big impact on sales at Caterpillar. But according to CEO Doug Oberhelman, there's no need to panic.
In terms of our business on the ground here, our production rates, what we're seeing with our customers in China, it's really more flattish than down. I don't see a doom and gloom atmosphere at all coming up, but certainly I don't see a boom either. I think really what we're witnessing is the continuing transition from a really good, solid, double-digit growth rate, 12 to 15% a few years ago, down to maybe 7 or 8, and frankly, we're all caught up in that kind of a slowdown.
Caterpillar, the world's largest maker of construction and mining equipment, is often seen as a proxy for global economic activity.
But there was good news on the outlook for the U.S. economy. After a setback from bitter winter weather in the first quarter of the year, the consensus now from the latest survey of the National Association of Business Economics is for the economy to pick up, despite the Federal Reserve's ending its bond buying stimulus. The group is also forecasting the U.S. economy to grow 3% or more by the end of 2014.
More potential problems for General Motors. Senator Richard Blumenthal of Connecticut is asking the Attorney General to force GM to set up a fund to compensate victims, family members, car owners affected by defective ignition switches in more than 1 million of its cars over the past 13 years. Defects that have been linked to 31 accidents and a dozen deaths. Under the terms of its emergence from federal bankruptcy protection in 2009, the new General Motors is not liable for claims from accidents that happened before July of that year. Meantime, the New York Times reports that federal regulators are looking into whether the automaker committed bankruptcy fraud in 2009 for not disclosing what it knew about those faulty ignitions and when the company knew it.
Coming up, tech drama in Silicon Valley. Did some of the biggest names conspire to fix the high-tech job market?
Guilty on all counts. It was a clean sweep for prosecutors in the trial of 5 former employees of the Wall Street swindler Bernie Madoff. All 5 convicted of charges ranging from securities fraud to criminal conspiracy for helping Madoff hide his massive Ponzi scheme for years. Previously, 9 other former Madoff employees pleaded guilty to aiding his fraud.
A hopeful time frame for Detroit to emerge from bankruptcy. Kevin Orr, the city's emergency manager, said today that he hopes the city's plan for financial restructuring will be approved and put in place by this fall. Thousands of city retirees and beneficiaries will receive ballots to vote on the restructuring plan by the end of April.
Congress returns to Washington today from one of its 2 spring recesses, and lawmakers have a lot on their plates, from sanctions against Russia to extending unemployment benefits to a possible vote to raise the federal minimum wage. John Harwood joins us now from the nation's capital with more. John, what's number 1 on congressional agenda this week?
Number 1, Tyler, is going on right now on the Senate floor, which is a vote to begin debate on a bill that would include aid, loan guarantees for Ukraine, also sanctions against Russia that would allow President Obama to go further than he's already gone. It also includes some reforms to the IMF, which the House has objected to in its own bill aiding Ukraine. But this is, while the president's overseas, this is a step forward that the administration hopes to take and the Democrats hope to take. They do expect to get the 60 votes needed to move that bill ahead, perhaps pass it by the end of the week.
So you think both sides will come together, Republicans and Democrats, behind this Ukraine sanctions. But what about some of the issues that Tyler just mentioned, whether it's minimum wage, immigration, whatever?
Well, I do think that the Republicans will come together eventually, if not this week. Other things, obviously, are much more difficult. Unemployment insurance benefits. There is a bipartisan agreement in the Senate. The House has said they're not going to pass it. We'll see whether they can sustain that position. They're resisting going on with a minimum wage. I think that is ultimately, this summer, perhaps an area where Republicans might try to diffuse an attack line from Democrats. But right now that it's stalled, you've also got a bill to restore doctor fees, the so-called doc fix. Many doctors under Medicare are going to see their rates cut unless Congress acts. That is one where it is likely that Republicans and Democrats are going to act because that's a key constituency.
Is there a point at which in this election year work either needs to be done or it just won't get done?
It's hard to say, Tyler. You know, typically people have said, well, if you don't get it done by the end of the summer, that big things can't happen. But, you know, you look back to 1986, the 6th year of Ronald Reagan's presidency, they passed tax reform and immigration reform in September and October before the election. So I wouldn't bet a lot of money on late action, but it's not impossible if Congress decides they need to move.
Boy, I'd forgotten. That's an interesting note, John. I had forgotten that was 1986 in the fall. John Harwood, thanks very much.
Herbalife gives Carl Icahn 3 more seats on its board, and that's where we begin tonight's Market Focus. The nutritional products maker will have 5 Icahn-backed board members if the new additions are approved. Icahn is Herbalife's biggest shareholder, and he's backed the company despite claims that it's a pyramid scheme. Shares surged about 7% to $52.86. Coca-Cola's executive team came under attack today for excessive pay. Shareholder David Winters, who runs the money management firm Wintergreen Advisors, sent a letter to Coca-Cola shareholders, including Warren Buffett, criticizing the company's compensation plan. The activist says the plan transfers too much wealth from shareholders to management. Coke responded saying Wintergreen has misunderstood how the plan works. Shares were off a fraction to $38.40. Reports that Apple is in talks with Comcast for a streaming TV service sent shares of both those companies up in today's session. The rumored deal would use Apple's set-top boxes and Comcast cables so that content could bypass congestion on the web. Shares of Apple rose 1% to $539 and change. Comcast edged up a fraction to $50.30. We want to remind you, Comcast is the parent company of CNBC, which produces this program.
And a report that Apple is considering launching a new on-demand music service weighed on shares of Pandora. Apple is also reportedly considering developing an iTunes app for Google's Android devices. Shares of Pandora down about 8% to $31.39. Disney names its ABC News president Ben Sherwood as co-chairman of its media networks and president of the Disney ABC television group. Sherwood will replace Ann Sweeney, who announced her resignation 2 weeks ago. And after the bell, Reuters reported that Disney will buy the YouTube channel Maker Studios for $500 million. Shares of Disney fell today, down 1% to $79.49. Cisco will spend $1 billion over the next 2 years to build up its cloud computing network rather than build its own cloud service and compete with companies like Amazon and IBM. Cisco will deliver the service, which it will call Intercloud, through a network of partners. Shares fell slightly today to $21.57.
Speaking of technology, it's tough enough getting a good job with a top company these days. But in Silicon Valley, a lot of high-tech workers are finding out just how tough it really could be. As Josh Lipton reports, there are allegations of secret agreements to not poach employees of large tech companies.
It all started with Apple and Google entering into an alleged secret agreement promising not to poach each other's employees. Now, court documents show that this alleged tech wage conspiracy scheme could include Microsoft, Oracle, IBM, and Comcast, among others. The class action lawsuit is being brought by attorneys representing 64,000 tech workers. A lawyer close to the case says they are seeking $9 billion in damages. They say there was a behind-the-scenes agreement to limit worker mobility and compensation. In 2007, when a recruiter from Google contacted an Apple employee, Steve Jobs forwarded the message to Eric Schmidt, Google's former CEO, saying, "I would be very pleased if your recruiting department would stop doing this." Google responded by firing the recruiter within the hour. In another email, Intuit's former chairman and Apple board member Bill Campbell wrote Google's Sergey Brin about Steve Jobs. "Steve just called me again and is that we are still recruiting his browser guy." Brin responded, saying Jobs had told him, "If you hire a single one of these people, that means war." Now one prominent Silicon Valley executive is distancing herself from this controversy. Sheryl Sandberg, Facebook's chief operating officer, filed a declaration with the court on Friday of last week that pins the scheme specifically on 2 Google executives. Sandberg says she was contacted by the Google executives who, quote, expressed concern about what was described as the perceived rate at which Facebook could hire employees from Google. Sandberg refused to cooperate with Google's offer for a non-poaching agreement in a clear rebuke to its rival. So what happens next? This coming Thursday, the legal fight between plaintiffs representing the tech workers affected by the potential scheme and attorneys representing the companies involved head to court. Jury selection starts on May 27th. As for the tech companies, they say they have done nothing wrong. Apple points out that between 2005 and 2009, hiring of tech workers at their company jumped 50%, and wages rose as well. No signs of a conspiracy there, Apple says. One legal expert says the parties may settle out of court. Another expects a fight to the end. Josh Lipton, Nightly Business Report, Silicon Valley.
Up next, why some of the world's top luxury auto brands are finding America is fertile ground for expansion. Prices at the pump are still on the rise, up 5 cents a gallon on average over the past 2 weeks. This according to the Lundberg survey. Among the reasons, the rising cost of the additive ethanol and refiners that are switching over to making more expensive summer blends of gasoline.
For years, German automakers like BMW and Mercedes-Benz have assembled many of their luxury cars right here in the U.S. But now demand is surging, and not just in the States. As Phil LeBeau tells us, U.S. manufacturing plants have now become the world supplier for many of those luxury wheels.
It is the newest model built by BMW. And as the first X4s roll off the line in Spartanburg, South Carolina, the head of BMW North America is banking on the luxury crossover, adding to the demand of BMW's X lineup.
Our dealers and our customers are screaming for more X5s, X3s, and I'm sure they will be very fond of the new X4.
The start of X4 production means BMW is once again expanding in South Carolina, steadily adding jobs to a plant where more than 7,000 already work. Since 2008, increasing demand for luxury SUVs has led BMW to more than double production at the Spartanburg plant. And within the next few years, that number could grow even more.
There's no doubt that at some point, BMW in South Carolina could be the largest location for BMW production anywhere in the world.
And it is the world beyond America that will drive 70% of the BMWs built in Spartanburg. The biggest market for exports are China, Germany, and the countries of Central Europe, followed by Great Britain and Western Europe. Given the growing appetite for luxury crossover and sport utility vehicles, could BMW someday build 500,000 vehicles every year in Spartanburg?
I wouldn't say it's impossible. At least we have the space already to expand the plant to further growth.
While BMW now trails Mercedes in luxury sales in the U.S., it did sell more than 300,000 vehicles last year, and the new X4 is expected to boost that total. The X4 rolls into showrooms in the middle of this year, and while BMW has yet to announce a starting price, most believe it'll start at around $45,000. Phil LeBeau, Nightly Business Report, Spartanburg, South Carolina.
And that'll do it for Nightly Business Report for tonight. I'm Tyler Matheson. Thanks for watching.
And I'm Susie Garib. Have a great evening, everyone. Tyler and I will see you right back here tomorrow.
Nightly Business Report has been brought to you in part by
TheStreet.com. Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NBR.
I'm Susie Garib with a Nightly Business Report news brief. On Wall Street today, big biotech stocks sold off, slamming the NASDAQ. Investors sold those shares on concerns from Congress about the high cost of new medications. The Dow fell 26 points, the NASDAQ down by 50. That's a drop of more than 1%, and the S&P lost 9 points. A U.S. senator is looking to force General Motors to set up a fund to compensate victims, family members, and car owners impacted by defective ignition switches. 5 former employees of swindler Bernie Madoff were found guilty on all counts for aiding his Ponzi scheme. And the price of gasoline rose nearly 5 cents a gallon in the past 2 weeks, according to a new survey, to $3.55 on average. But that's still 15 cents lower than a year ago. Be sure to tune in to Nightly Business Report right here on your public television station.